Number 52. What is so significant about this number? Is it my favorite player's jersey number? No. Is it my age? No, I'm quite older than 52. No, what this signifies is 52-week highs, and in this video, we're going to talk about 52-week highs, how to spot them, how to scan them, and how to trade them. So, let's get started. Hey, Optionetics Power Profit Trade members, welcome to Tom's Trading Room here where we offer analysis, insight, and step-by-step comparisons of alternative investments other than just buying stocks. Now, do me a favor right now, because somewhere between me and number 52 here is the like button. If you like this video, click on that button. It helps support this channel. Also, click on the subscribe button on the other side, ding the bell next to it, and you will be notified as soon as a new video is uploaded. All right, let's talk about 52-week highs, how to find them, trade them, etc. And we're going to start with a little bit of psychology on the 52-week high. Now, when a stock makes a new 52-week high, this is something that is obviously broadcasted everywhere because news, when it comes to the stock market, good news is a lot better to advertise than bad news. And so trend traders, momentum traders, all line up to buy these stocks and potentially make them go higher, right? For traders, the belief is that if the stock's hitting a 52-week high, there's no resistance point at that point over the last 12 months to make it go higher. And also, we see that when a stock makes 52-week highs, that quite often it continues to make future 52-week highs. Now, take a look at the chart you see right here. This is a chart of Amazon.com, and I want to show you, going back just to the last 6 months, what has occurred. There was an earnings report that came out where the stock popped to a new 52-week high back in April. That high was eclipsed in May with a new 52-week high. 52-week high in June, 52-week high in the middle of June, a brand new 52-week fresh high all the way up here at the beginning of July, and then we had to wait, and we saw the pullback occur, and the next 52-week high did not come in until just recently. Now, how well have they done in the past? Well, here's a back test on small cap and large cap. Now, this isn't something that's going to make your head pop off for sure, but just keep in mind, these are averages. Averages of all small cap stocks had a 0.62% gain on average after a 52-week high the following week. The following month was 1.89%. Large caps fared a little less, 0.17 on average the following week after a 52-week high, and 0.70 after 1 month following the 52-week high. So what does this tell me? Well, this tells me that there are stocks in here that are moving consistently more than these averages, and then there are some that move consistently less. So we want to find those alpha stocks. All right, alpha stocks are the ones that you and I hear about on the news all the time because they're the ones that are going to be pushed up the most when 52-week highs come around. So let me show you an example of alpha stocks that are hitting 52-week highs right now. So alpha stocks are the ones that you and I all know about. Facebook, the S&P 500 ETF, that is SPY. All right, Apple, Tesla, Amazon, Alphabet.com. All of these are now hitting fresh 52-week highs. And so if you take a look at Facebook, this is a great story right here. Facebook, not too long ago, if I pivot here for a moment, we were hearing cancel culture coming out on Facebook as the stock went from about $240 down into the low twos, getting down to around 208. And I had put out a video back when this was happening saying that more than likely this was going to be sell the rumor and buy the news, and that's exactly what ended up happening. But since then, what has happened? Well, we had a 52-week high happen in Facebook. That got eclipsed right after earnings, and this stock is now trading in upwards of $300 a share. If you believe that Facebook is going to continue on this move because it's hitting 52-week highs, what do you do? Well, we could simply buy the stock, and if you imagine for a moment 100 shares of a stock at $300 a share, All right, we're talking about the equivalent of $30,000 to buy this stock at $300 a share. What other opportunities do we have? Well, there are several. I'm going to mention two to you right now. Number one, we could look at the options on Facebook, and let's go out farther than 1 month. Let's go out to the end of the year. Now, again, this is not a recommendation. This is how I look at the markets to look for alternative investments other than simply buying stocks. So if the stock's trading at 303.91, we could look at an example of, for instance, the 305 call. Right now it's trading mid-price at $33.83. What does that mean? Well, first off, it does not mean we're going to be paying $30,000 for this. We have the right to buy the stock at 305, and to buy that right, it's going to cost us $33.83. Basically what that means is that if we bought one call option, that's the equivalent of 100 shares of stock, we're going to pay $33.83, or guess what? $3,383 for one contract. That means we have $3,383 worth of cost, $3,383 worth of risk, and we need the stock by January 15th to move higher. So let's take the same example using Facebook, but in this case, we're going to buy the 315 calls and we're going to sell the 325 calls. Buying the 315 calls are going to cost us $29.25. Selling the 325 calls, we're going to be able to bring in $25. So if you pay $29.25 for your lower strike, and then you take in $25 for the higher strike, your net cost before commissions and slippage is going to be $4.25. Or multiply that times 100, because one contract, in this case one contract spread, times 100 gives you your total cost, $425. So I've presented three opportunities to you here for a 52-week high trade. Number one, buy the stock, $30,000. Number two, buy the call option, and you're buying basically a slightly out of the money call. It's going to cost $3,383. Or number three, we could buy a call spread, buying the lower, selling the higher, and paying the difference, $425, which, by the way, this $425, that's our cost, that's our risk. Our break even is going to be $4.25 above the price that we purchased. So actually, this is going to be less than $320. And more importantly, this trade does have a chance to double, and the stock, Facebook, doesn't have to double in order for this particular trade to double. All Facebook has to do by the time we get to January 15th is be at or over $325. All right, can that happen? Absolutely. It could happen in a week. If you take a look at the stock price and what's been going on with the stock price, it can happen in a week. It doesn't need 3 or 4, or in this case, 5 months to expiration for it to happen. So in summary, 52-week highs show strength in the markets, but they also could potentially spell future corrections, especially if we see a lot of stocks hitting 52-week highs all at one time. Now, in this video, we showed you how to scan for multiple stocks, and I showed you how you could create multiple positions, alternative to just buying the stock if you believe the stock that you're looking at that has a 52-week high could be moving higher. All right. Hey, finally, I want to let all of you who are new to us know that if you look at the description below this video, you will find a link for a free 2-week free trial to all of our tools at tomsoptiontools.com. Just pick out whatever package you like, and you could be getting that free 2-week trial instantly. All right. Hey, thanks for joining me. Once again, if you liked the video, show us some love and hit that like button below. Subscribe, and you'll be getting our videos as soon as they're uploaded. Next week, I'm going to be presenting my case for the month of September using the money calendar and showing you where I see seasonal opportunities during the entire month. Look forward to it, guys. Have a great weekend. We'll see you next week. Bye now.